the biggest monetary experiment in all recorded history. That had to be the offset to this. I was then looking at the chart of Bitcoin, and it was forming this perfect big triangle pattern, which is a nice consolidation pattern, usually that precedes a breakout. And it backed into the middle of this triangle in March 2020 as everybody panicked and all risk assets sold. And that was the time I said, this is the opportunity. There's only one way for this to go. It's either going to zero, which was almost no chance, or this was the start of the move. So I started buying Bitcoin then. Then I really went very long when it broke 10,000, which was the triangle. And then over the course of the year, I got to 100% of my liquid net worth by about August last year. Wow. That was all in Bitcoin. And then I broadened that out and increased my Ethereum exposure by about October, thinking that Ethereum was actually going to massively outperform for a couple of years. So increased my Ethereum exposure and then added a basket of other tokens, and then took some macro bets in the future of where this is all going, which I think is communities, social tokens, that kind of use of NFTs outside of just artwork, but attaching assets to the blockchain and also the metaverse. So that's where I am now. And so I'm now mainly, I think about 55% Ethereum, 25% Bitcoin, and the rest spread amongst a bunch of different tokens.
And what about Ethereum? Why increase your exposure so much so that
because
it even trumps Bitcoin?
In October, I started seeing the chart of Ethereum versus Bitcoin and looked like it was going to start outperforming, just a chart pattern and a hunch. And then I started digging into, okay, how do you value Bitcoin and Ethereum? So we've had the stock to flow model, but really what it was to me was also a network. And you use something called Metcalfe's law to value a network, which is basically a network has value proportionate to the number of people on the network and the number of interconnections they have with each other. I could see that in Bitcoin, and you could pretty much prove it out by putting like number of active wallet addresses and the price of Bitcoin on a chart, and you basically get a very high correlated answer. And I could see people attacking anybody who talked about Ethereum or other tokens online. So I'm like, I need to find out how you price Ethereum, because I have a feeling it's exactly the same as Bitcoin. And what was interesting is I used the same mechanism and it's priced exactly the same way. But what was more surprising is the adoption of Ethereum was much faster than that of Bitcoin at the same stage. So I'm like, wow. And then you start realizing the number of things being built in it, the applications, the number of developers involved, and the speed of the increase of the number of users. So there's a lot of interconnections plus a lot of users. That was going to become very valuable. So then add a chart onto that again. Chart of Ethereum looked like it was going to break out, and that gave me everything I needed.
And how are those charts looking now?
Well, they continue to show that, even Ethereum has been having more volume in certain days than Bitcoin has. The wallet address growth is faster than Bitcoin. In every way, it's outperforming Bitcoin, except in market cap. I think we call it the flippening when Ethereum is larger than the market cap of Bitcoin. That's nothing to say that I don't believe in Bitcoin. Mm-hmm. Bitcoin is a different thing to Ethereum. Many hardcore Bitcoin believers think that all applications will be built on the Bitcoin blockchain. But I think that's more a hope than a reality. The reality is many different ecosystems will get traction for different things. And Ethereum right now has DeFi, NFTs, social tokens, all on it. Mm-hmm. So it doesn't have to be money. The next part of the equation comes with the introduction of the EIC 1559 token, which essentially lowers the supply of Ethereum by burning Ethereum. And then there's the ETH 2.0, where we move to proof of stake, which again, will lower the gas fees, but also will lower supply even further. So it becomes a super scarce asset with massive use. So probability is it's going to do pretty well.
I'm really interested in kind of how you're looking at all these applications that you've mentioned that are being built on ETH, DeFi, NFTs, social tokens. Are you investing in these, testing them, playing with them? Like, what's kind of your experience with these applications been like?
DeFi, I've invested in some of the protocols, but I have not used DeFi. I'm not really a yield guy. I don't really care about yield. Macro guys tend to be price appreciation people. So I tend to look for those opportunities more than I look for yield. And I don't think we yet understand the full risks in DeFi, which protocols are going to work, which ones are better, which ones aren't. But I've invested in some equally weighted basket of a bunch of them just to have exposure, just so I get understanding. And then with social tokens, NFTs, I've invested in some of the NFT platforms. But the social tokens, there's not many of them around, but I've invested in those too, more significantly, because I think they are, maybe not even for this cycle, but I think they're going to be a huge part of the global business model going forwards, when businesses start coalescing around communities and how communities can drive their own value system by using tokens and network effects to increase the size of it. So I'm really excited about where this is all going. Networks, it's all the same. Everything is the same trick.
Right.
So let's say you are Disney. How many fans does Disney have? What is their community? If they were to bring them together as a community, I would guess 1 billion people, maybe 2, maybe 3. Okay, so there's 3 billion people who love Disney, and they will consume Disney in a number of different ways. So why not? How does Disney access their fans right now? They have to rent them back off Facebook, YouTube, Google, Apple Music, Apple TV, Spotify. They have to rent them back and pay away economics. Mm-hmm. The only point that they ever do is when they walk into the Disney store or walk into the theme park. But what tokens do is give them direct access to those fans, because you now have a relationship where that token is the currency of the Disney world. So I can buy things, and if I happen to be a currency owner, I can get things at a discount. I can get certain access. I might get to see the film a week early. I get so many benefits that I value as a fan, and I might get Disney Plus at a discount. And if I renew my Disney Plus every year, maybe I get more tokens, and maybe I can build a business of selling Disney t-shirts and I charge them in Disney tokens, and people start building businesses. So you build a whole economy around Disney, of which there is one already. It's huge, giant.